Now, Indian pharma companies have had a tough time of late, no surprise really, everybody knows about it. And especially for firms with a sizable presence in the US, as pricing pressure thus far has only added to the existing regulatory woes. But things may have started to change a little bit. One company that can perhaps buck this trend is Lupin. The drug makers just received approval to sell some flagship drugs in the US region as well. There are, of course, hitches over the space with warning letters existing on some of the companies as well. In Lupin's case, a couple of plants also have this. So what's the outlook looking like, and how have the last 3 months been very different from what the last 3 years have been? Let's talk about the overall market sentiment and some of the topics that we'll touch base upon with S Ramesh, the Chief Financial Officer of Lupin, who's here in our studios. Ramesh, so good having you. Thanks so much.
Thank you very much. My pleasure.
No, that's my question really. Have the last 3 months being different from what either sentiment-wise or otherwise the last 3 years have been? Because the market certainly seems to believe that there is some bit of recovery in business and sentiment in the offing.
You're right. It's not just the last 3 months. I think the last few quarters have been pretty, lackluster for pharma in a general sense, and especially for Lupin itself. But things are certainly turning around. For starters, I think price erosion has been contained around the high single-digit mark. Second, we do believe that we would have a few more. Our problems are kind of exceptional because of the fact that we had lost exclusivity on a couple of big molecules for us, and that obviously is telling on our performance in the US. But having said that, we were also stymied by the fact that there were not too many good approvals coming through for us, especially because of the warning letter, which we were facing. But having said that, when it comes to, in fact, newer launches, we do expect, in fact, a couple of launches during the course of this year, levothyroxine for sure, and Ranexa. The second most important thing which is happening for us is essentially secondazole. That's something that we launched as a brand. It's a branded product which we bought into. It's going to be an anchor product for our women's health portfolio. And we do, the initial, reception from the market has been very good. The prescriptions have been going up all the time. For all of those reasons, we do believe that it will turn out to be a pretty good product for us. We do expect that ramp up in the third, fourth quarters, certainly not to the levels that will peak at possibly in about 2 to 3 years' time, but it's certainly ramping up. For these reasons, we do believe that the second half would be certainly better than the first half.
Okay, and just one follow-up on that answer that you gave with regards to pricing. Now, you mentioned that pricing pressure seems to have contained for now. Is there a possibility that we can look into the next 2 or 3 quarters or 4 quarters and predict whether the pricing pressure will remain or the pricing will remain at these levels, or could it actually even show a bit of a bounce? Any thoughts that you have on how pricing will shape up over the next 4 quarters?
I think it's going to be contained. The price erosion is going to be contained at this level. But going forward, things could be better, more because of the fact that there is consolidation happening in this industry also. A lot of this pricing pressure in the past is because of channel consolidation, and that's of course come to more or less an end. And there's a lot of other companies which are also saying the same thing. They're saying that they're going to shed their portfolios, and they're also not seeing too much of price pressure coming in henceforth. The other part is when it comes to the channel partners also, they would like to partner with companies who have the track record of supply chain metrics, of quality. To them, the last thing that they would like to be into is a situation of a stock out. So to the extent the number of people that they can actually partner with is going to be limited. And that leaves a limited number of people from India. The other thing which is my personal perspective is that the cost of doing business in America is certainly going up because there's a lot of capital expenditure required for newer companies to set up and start supplying to that market. And a lot of companies who are seeing that the returns are going to be lower might fall out of the American market. And that would potentially mean that it's going to be the bigger players in there who are going to consolidate and grow in that game.
Okay, Ramesh, post the first quarter when you spoke, and I'm happy you maintain that second half will be better. But what's the scene currently with the US market in terms of how is Gavis performing? How much benefit will the rupee get to you? How much is the core growth that will come in? Because no doubt the US market, the revenues will go up because how the rupee is panned out. But ex the rupee, what's the scene like currently?
The rupee is, of course, a big tailwind for us. You spoke about, in fact, Gavis. As you'd be aware, and I said this before in your own studios, you're aware of the fact that you've taken an impairment.
Yes.
And that is obviously, so to the extent you have taken the losses already. There are more upsides coming in from Gavis at this point of time, and that's not been factored in at all. As I said, going forward, given the fact that our, a lot of our more complex products are yet to click in. For example, next year, I think starters, we would have ProAir coming in.
Okay.
I'm not going to take this card because this year I've already said that. There's other things coming up on the inhalations portfolio. We have also, in fact, the biosimilars, which is going to blossom for us. So all of this will certainly start contributing.
Okay, so I'll talk about all these products in detail. The first, I think the point is that you said that $800 to $850 million will be the sales guidance. You've done close to 177 in the first quarter. Pretty much the street expects a similar number in the second quarter.
Yes.
How are you planning to do it? Because the street certainly feels that this number probably won't be met. Your internal estimates, and how is this going to happen?
So essentially, as I said, so levothyroxine is going to be a decent product for us. That would be, so none of these are going to be the same range as a Glumetza or a Fortimet, but it's certainly going to be tens of millions, so to speak. Then we have Renexa, which is going to be limited, competition. It's going to be, it's virtually first to file for us. Essentially, it is going to cross for the first few months that we have that. And that, of course, Secretizol itself. And apart from that, we do expect, in fact, resolution, in fact, of our FDA issues by the end of this calendar year. We've already done what it takes to, to get it to par level. We have been submitting frequent updates to the authorities. It's a question of time before they come in and inspect it again. And we do expect resolution to happen by the end of this calendar. And you start newer approvals coming in from there and so on. So all of this will certainly click in.
Levithro is something that, the street is very, very keen on. Probably the street anticipated that in the first half this approval will come in. Many of them believe that, September will be the month. Your internal estimates, what is the peak sales probably you see from this drug? And with competition coming in, Amneal has already come in. How are your internal estimates for this drug?
As I said, it's never going to be another Glumetza, but for sure it's going to be in the multiples of tens, 30, 40, so to speak.
$30-40 million?
Yeah.
Okay. When do you expect the launch?
Towards the end of this fiscal, as I said, second half of this year.
And competition, how important?
Competition is there for every product around, so there is going to be competition for this product as well. But despite that, we do believe that it is a pretty complex product. Approvals are not going to be easy for this as well. Yeah.
Okay. Secondly, what's the pipeline? You already spoke about a couple of drugs that are there. Just detail for our viewers over the next few months till the end of the fiscal. Which are the important key drugs that will be out of the Lupin stable that probably will drive revenues?
At the cost of repetition, I just told you about levothyroxine. I spoke to you about Renexa. Then we also have ProAir coming into towards at the beginning of next year, early part of next year, so to speak. And then there's a lot of other products, so our pipeline is indeed rich, 300 odd products, of which about another 150 to go. So we will be looking at, in fact, at least about 20 to 25 launches over the next, every year for the next 3 to 4 years.
And for ProAir, what kind of peak sales are you anticipating? It's time, but we just want an estimate approximately.
It could be a pretty large product. It could potentially go up to about $100 million also. So because essentially it's a fairly large molecule, it runs to close to a couple of $1 billion. There is going to be very limited competition for that. Perrigo is there. Cipla has also come out of the news saying that they would also be at some point of time getting in there, and it's us. It's of course 3 products, so to speak. So it's an HFA market, so to speak. And you have ProAir, then you have Ventolin and Proventil. So all of this would be captured by the first generic, so to speak. Okay.
Just a few questions, Neeraj. There are some concerns that the market has, and just wanted you to answer. One of them is Solosec, which was launched. It's been a while since this drug has been launched, but the market share is relatively low for the company.
It's not true at all, because we launched it pretty laterally. So eventually it was only towards the end of June that we launched it.
And it's 3 months.
It's 3 months, and the prescriptions are a lot more than what we anticipated. It's at least in the range of 10x in terms of our anticipation. There's a lot of reasons to believe that it will actually, do very well for us. And our own, take from the doctors, from the gynecologists who are prescribing it, it's doing very well.
No, but the reports that I read, the IMS notes that have come out, we obviously we don't have access to it. We depend on the brokerage, and they said that the market share is just 1% in 3 months. So firstly, it's a concern that ramp up has not happened. So what are you doing? Are you going after new doctors? Are you looking at business from the same doctors? What's your strategy with this drug?
Most importantly, I think the formularies are accepting it. Its acceptance rate is very, very high out there. And of course, need to go after the doctors, and it's exactly what we are trying to do out there.
Okay, Neeraj, you have a few questions and I'll come back.
Yeah, so, I was looking at some reports and somebody's done this annual report analysis for you as a company as well. And their analysis seems to suggest that for FY18, acquisitions have led to a boost in revenues. And then they've done an analysis for the last 8 or 9 years. And their belief is that all of the acquisitions that you've done have somehow led to a boost in revenues for you. So they have worked out very well. My question to you would be, the next 2, 3, 4, 5 years out, would you reckon that revenue upticks for companies at large and for Lupin in particular would be a factor of how well a string of pearls acquisition strategy is carried out?
So let me start with, in fact, the first question that you asked me. It's true that we have been acquisitive over the last 10, 12 years, so to speak. We've done close to about 15 acquisitions. But I think you would look at acquisitions. The first year is obviously an acquisition. Then after that, over the next couple of years, it's all about actually organically grow that. If we talk about most of our acquisitions, we actually bought it when they were pretty small companies, and over time we have grown it to a pretty large number. Case in point, to look at South Africa, we bought it when it was perhaps in the 10, so to speak, 10 to 15 $1 million. It's close to about $80 million. Philippines, we bought it when it was $4 million. Homosan, when we bought it, about $4 million. So all of these have been near, scratch, so to speak. So it's a virtual organic play that you have indulged in, so to speak. So, and it's fair to estimate that about 85% of our growth, and if we take the actual incremental to be actually organic, 85% of our growth has actually come from organic play only. It's only about 15%. And to that extent, the one large acquisition which has not paid off is essentially possibly Gavis. Apart from that, most of our acquisitions have done extremely well over time. The first. The second part of the question, when you speak about going forward, so the most important acquisition in recent times has been Secnidazole, and we bought it at a fairly reasonable price, and we think the kind of monies that you could make out of it is pretty good. And the payback period, which I think is the most important estimate for a lot of this, metric could be perhaps about less than 5 years.
But so again, that estimate seems to suggest that not just in the recent 2-3 years, but over the last, 8 number of years that you've acquired small companies and maybe gotten them big, or small products and gotten them big, the revenue contribution has been fairly strong. The profitability contribution from these at least remains a bit muted. Would you agree? And if so, would you do something to change that?
I have a different view in that, except for Gavis, which I think has been, kind of not so good for us. Others actually have grown in profitability. When you bought into Japan, for example, it was actually a turnaround situation. It was actually a loss-making unit, and you made it profitable. Nearly every other company of ours has actually been, break-even or slight profitability, and we've only increased it. Even Mexico. The other company which is still perhaps in the red in some ways is potentially Brazil, but it's a difficult market. It's just it's still early times. It's been less than 3 years since we bought into that. But there are parts of the business which are doing very well, and we are expanding, getting into a newer portfolio of products, including the OTC segment out there, and that's one reason why it's actually losing monies. In a general sense, I think we are focused on making all our acquisitions work. I'm not saying that it actually has worked in everything. Gavis has always been the case in point. But in a general sense, we've been pretty successful in integrating most of our acquisitions to make value for us.
So I just want to dwell more on Gavis. Now, just a word on what went wrong actually in Gavis. You said you've taken an impairment, so it's a clean slate now.
Yeah.
What happens now? Are you infusing more money? What's your expectation of Gavis now? Because now it's a clean slate. Because all the losses that you've taken. So what can I expect from Gavis now?
I think Gavis is integrated into our American operations itself, and I think calling out Gavis all the time and seeing it separately, it's a siloed approach. I don't think that's fair at all. I would say that it's fully integrated. The controlled substances market is obviously has its own ups and downs in the American market. Currently, the prescriptions are down when it comes to, in fact, controlled substances, and obviously has an impact on the fortunes of Gavis itself. Going forward, we see that as a good manufacturing facility. We've got a good R&D team out there, and we'd like to make good with that.
What about the facilities now? You recently got clearance for your Nagpur facility, which is good. But the two important facilities are Indore and Goa, and you've said this on multiple forums that you've done your remediation. What's the update as of today? Have you received any communication from the U.S. FDA? Are you fully compliant on your end that they can come in any time and check this facility?
I took this up front. I said we are in a state of readiness. We are in a position to receive them at any time that they feel like. And I would imagine that this facility would certainly see better times in the next by the end of this calendar year.
But have you communicated to them that you are ready, and have they responded to anything?
So it isn't like that, So we are obviously in a state of readiness because we've done all that it takes to get it to that level that is desirable. It's for them to come over and do their inspection.
Okay, a couple of follow-up questions. Glumetza and Fortimet, what's the market share now? What's the future for these two drugs from Lupin?
Never get into product-wise revenues. Those are marginal products in a scheme of things. So it's already seen a lot of competition. There's been price erosion also. So just one of those products in our portfolio currently.
Okay, Renexa exclusivity is something that you have. What kind of sales can we anticipate? How big of this drug will this be?
It's a fairly good product. It's obviously not going to be the same league as a Glumetza or a Fortimet, but will do well for us, for this particular calendar year.
Okay, coming back to Solosec, because I believe a lot of analysts in the street had question. How much are you spending overall on this, and how much returns is this drug going to get you?
I don't know what you mean by spending. So essentially, we bought it for good value, and we do believe that the payback period would be between 5 to 6 years at very worst.
Spending in terms of ramping this up?
The usual stuff when it comes to, in fact, promotions. So essentially, about $45–50 million on an annual basis.
Okay, what about Tamiflu? How confident are you that over the next few quarters this drug can get you sizable returns?
One of the reasons why I'm a lot more bullish about the second half is because Tamiflu, it's certainly going to ramp up because of the flu season, and you would still you would know that we have a lot of products in our cephalosporins in a range, and those would contribute to the flu seasons coming up between October and March this year.
Okay, one question, and I think this is a concern that I had conversation with several analysts right through the report. The question is that why is the R&D productivity much lower than peers? And what I mean is that why haven't you gotten any difficult to produce product approvals of late?
Yeah, we're taking, we're conscious of that. The fact that some of those approvals that we should have got have escaped us because I think it's come a cropper with us. It's for two reasons. So one was principally because we had done some work with, in fact, Semler, which is one of those blacklisted CROs with the FDA, and there again we had the misfortune of some good products which you should have got in the normal course, failing at the last step because of this. The second is because certain products, where we believe that we should have got our act right, we went the wrong pathway and we got it wrong. But having said that, I've said this in multiple forums, we are working with, in fact, external consultants, big consultants, for getting a lot of our act right when it comes to our cost base. I'm very conscious of the fact that the R&D spend is pretty high. It used to be about 12 to 13% in recent times. We'd like to cap it at 10%.
Okay.
Firstly, I think we are focusing on R&D productivity itself, making the R&D dollar run a longer mile. The second part to it is obviously we would, we've also got into a relationship with in fact, financing arrangements whereby the downsides are protected to the extent that the risk is passed on to, in fact, the financial investor, but the upsides we would be sharing in. And we're doing that for all of those risky molecules. So you'll see good times coming in from R&D. Okay,
and final question from my end, it's a repeat of this thing. Just want to, how confident you are that you will meet your $800 to $850 million
at this stage, fairly confident.
You're not revising it at this point of time?
Not at this stage.
Yeah, that's from my end, Neeraj.
Okay, now just one last question to wrap this up, Ramesh. If all of the answers that I've heard you say, which is that pricing pressure in the US seems to have bottomed out, you're hoping for some approvals coming in by the end of this current calendar as well, and you're conscious of the costs, etc., that are shaping in. Would calendar year 19, I'm not dividing into FY19, but calendar year 19 as a year, will it shape up much better than what calendar year 18 you would expect it to be? I'm omitting calendar year 17. There's a bit of a washout here for most companies, probably including yourselves. Are you a lot more bullish into calendar year 19?
I don't need to be a soothsayer here, but I could tell you for sure, FY 19-20 would be certainly far ahead of 18-19. It's certainly going to be much better.
And FY 18-19 also, you seem to be a lot more bullish than what...
I would say it's going to be one of those lackluster years, perhaps the same level as perhaps last year. But the next year, I'm fairly confident.
Okay, and for multiple reasons that Ramesh has already outlined for the industry as well, you would believe, Ramesh, that would be the case?
I would imagine so. That's true.
Okay, great.
I think we have seen the worst of it all.